Today we're going to be looking at our trading strategy for these days that have a sideways moving range. As you can see here, we had a couple hours throughout the day where it really was just moving sideways, and this can be a tough environment to trade, but we have some ways to take advantage of this. Traditionally, people would be looking to trade a range like this, looking for breakouts, meaning if it goes above or below your range, you take a long or a short, respectively. For example, here would be considered a breakout traditionally, but as you can see, if you had taken this long, shortly after it would have pulled back against you. And you can see it hit the top and bottom areas quite a few times in this range. And we look to take advantage of this back and forth movement through the range. Our way of doing so is taking shorts at the tops of these ranges and long at the bottom of these ranges. Now, one thing to keep in mind with a range is we don't have to look at it as an absolute number. We can just look at it as a general area. Like we know this is the general bottom of the range, and this is the general top area of the range that it's in. And keeping that in mind is you don't need to wait for it to get all the way to the top of a range or all the way to the bottom of a range to take your position. You just need for it to get in that area. Now looking at that same area again, with our approach you'd be looking to get short somewhere around here. Now we try and get this as close to the top as we can so we can have a smaller stop, as well as making sure our stop is outside of the range, but it doesn't need to be that absolute top like I was saying. So if you got it somewhere around here, you might have had a bit of a little pullback first, depending on where you got it, and then you have this nice drop to the bottom of the range. However, this is not the only location we can look to take a trade. You could even be looking as early as back in this kind of area to be going for a long. Now, we do want to make sure we're getting these trades close to the edge so that we're giving ourselves room for it to move back through the range, as well as making sure we can get our stop outside of the edge of the range. The reason we want to do that is if we took it in a position where our stop ended up lining up with the edge, we could hit this edge and the range would still not be broken, and it could move off of that point, and our trade still should have been valid, but we got ourselves stopped out. So you want to get it close enough to the edge so you can get it outside, and also the closer you are, the smaller of a stop you can use to get outside of this, as well as giving you more potential to move through the range for a better risk-reward ratio. And further expanding on that risk versus reward topic, let's say we're using a 5-point stop, which the NASDAQ 5 points on a single contract is worth $100. Now, if you look up here and down here, that's about a 17 to 18 point range on it, but we won't be getting the exact edges on these, so we'll just call it 15 points, which in the NASDAQ is worth $300, so we would have a 3-to-1 risk to reward ratio. This is something you want to keep in mind when you're trading these ranges to make sure that you can get enough movement out of these for it to make sense for what you're willing to risk. And also that's why it's important to get these near the edge, because that can even let you reduce the size of your stop, because we do want that stop to be outside the edge of the range. For an example of where you could be placing trades, we'll first look up here. Now we know back here is 97 at the top, and right here is 92. So we want to make sure we're getting our order in above this location, so our 5-point stop we're using will be above this top. So we want to get somewhere in around here, and we see here that this has started to slow down. It wasn't just steaming all green candles in one direction. We had some pullbacks and some back and forth here first. So we get our order in, gets us, we've got our stop outside of here, and then we have some move down. We do get a pullback, but our stop's up above, so we're still in. And then we get a drop down here. So after reaching this bottom and seeing it slowing down and not just steaming down with red candles, you may want to be looking to get this long. So we'll look back here again and see it's 79.5. 5 points above that is 84.5. So using our 5-point stop, we want to make sure we're somewhere in this range to get outside of this 79.5 edge. So let's say we got long somewhere around here with our order. So we would get our stop below here and we'd be ready, and then we'd get this nice move up. And if you see, this actually took out the previous high. So depending on where you moved your stop up, you may have got stopped out and looking for a short, or you may have held on to this and got a long. The thing to remember is that just because we're trading these ranges doesn't mean when these breakouts happen we can't still continue to hold on to them and take advantage of it. But also, if we did get stopped out and get a short somewhere up in this area, we would have been stopped out of the short. However, we did have these two trades prior, so our day would be profitable in the end. The important things to remember in these trades are that 1, you actually have enough room to get something out of it, because if it's only like a 3-point range in the NASDAQ, well then that's only $60 worth, and that's going to be hard to take advantage of. 2, you want to make sure you're getting your trades near the edge so that you have room to move and you can get your stop out without it being too large, which you'll have more leeway on the ledge the larger these ranges are, because the smaller a range is, the closer you want to get to an edge and probably the less you want to risk on it. And 3, you just want to make sure that it actually makes sense from a risk-reward perspective, because if you're going to risk $100 and your potential is only $80, then that doesn't make very much sense, and you probably shouldn't be taking that trade. So I hope this helped give you an idea of what to look for trading these sideways ranges.